Sorry. Yeah, I've started that. So majorly that's because of the imbalance here between this low high and this low. So that's why price came to use this base before it continue order flow. Okay, so let's quickly go into that. So what is an imbalance? It's very simple. An imbalance shows inefficiency in the market. You still understand the beauty of imbalance later. It is one of the most important things in the market. Very, very important. Inefficiency. Okay, inefficiency. Very, very, very so much important. Okay, so let's look at the imbalance that we have. A minute. So let's say we have, for example, 3 bearish candle. So let's say we have 3 bearish candle. Okay. And of course, we have a weak, and then we have a weak. Okay, so these are 3 bearish candle. It can be 3 bullish candle as well. So let's draw for a bullish candle as well. Just imagine. So bullish candle. Let's say we have 3 bullish candle. Okay, 3 bullish candle. Three bullish candle. Okay. So majorly, what do we call an imbalance? An imbalance is if the first candle and the third candle, the low in the bearish scenario, the low of the first candle and the high of the third candle, this is the high of the third candle, if they do not touch each other. Okay, if they do not touch what? Each other. If they do not touch each other, we say that an imbalance exists between them. So what exists between them here is inefficiency or imbalance or fair value gap or whatever you want to call it. So the low and the high of this candle, if they do not touch each other, that's an imbalance. This guy right here as well, between this low and this high, the first candle and the third candle, they didn't touch each other, so there exists an imbalance. Okay, that's an what? That's an imbalance. So this low, high, imbalance, this low and this high exist and what? An imbalance. Okay, so what do we now call a base candle? Okay, what do we call a base candle? We have what we call in demand and supply. We have what we call, or we have 4 different forms of demand and supply. We have the rally-based rally, drop-based drop. Okay, so let me just, as I'm mentioning them, let me just, so we have what we call rally, base rally. So which is what? RBR, drop, base drop. Okay, DBD, rally, base drop, and drop, base rally. Okay, and drop, base rally. Now, what is common in all of these guys? A base. a base, a base, a base. So a base is majorly more like a controlling supply or demand. A controlling supply or demand. That is a base. Okay. So when we get to demand and supply, we will majorly talk more on all of that. So a base majorly is controlled demand or supply. So a base is what is common. So why is it a base? A base majorly is a structure, just like I said the other time that base mitigation or structure mitigation is the same thing. Okay, so we call it a base because on corresponding, if you check a certain lower time frame, let's say I check 5 minutes, on 5 minutes time frame, a base will appear as a consolidation. That's what a base will appear as maybe a consolidation, something like this, support to resistance kind of thing. Okay, so that is how a base will look like on a lower time frame. But when you check higher time frame, this same area that you see as a consolidation, let's say you now check 4-hour time frame or daily time frame, this particular area, as much as you see many candles on 5 minutes, will just appear as maybe just like a candle in form of a doji. Usually in form of a doji, something like this. Okay, so this is what we call what? A base candle. Is that understood? So this is what we call a base candle, and that's what I was trying to show you guys on GBP/USD the other time while I was explaining structure mitigation. Okay, so this is a base candle. This is a base candle. But on lower time frame, it will appear as as consolidation, as a big structure like this. But on a corresponding higher time frame, it is just a small candle like this. So this is a base candle. Is that understood? So a rally-based rally is simply a bullish move, and then a consolidation, in which in the real sense that consolidation is distribution. Okay, so this is more like a Wyckoff cycle. Don't worry, we'll get to that when we get to the other part of this mentorship. So this is distribution and then markdown. Okay, a markup, a consolidation, and markdown, which is distribution. This whole thing that you see here is a base. So this was the rally, a markup, the rally, the base, and then the drop, rally, base, drop, base, rally, and all. So at times they appear as just candles. For example, look at this area here. Okay. So for example, look at this area here. We have a rally. This bullish candle moved to the upside, a base, this doji candle here, and then a drop. Okay. So rally, a base, and then this drop. Rally candle, a base candle at the top part, and then a what? A drop candle. Okay. So that's it. So this guy right here is a base. Is that understood? So it is as simple as that. Okay. But what we are interested in tonight is majorly the base. Okay. That's what we are interested in tonight. So what we are interested in is majorly the base candle. Okay. And why are we interested in the base candle? Okay. We are interested in the base candle because anytime you see a rally, so we are much more interested in this first two for tonight. We're interested in rally-based rally and drop-based drop. So let's say, for example, you see a drop, which is a bearish candle, okay, and then you now see a base in form of more like a, let me redraw that. Okay, so let's say you see a drop. Okay, you now see a base candle beside it, and then you see another drop, and then you see another drop. So we have a drop, a base, and a drop. Okay, now what do you notice? You would see that there is a space between this low and this high. There is a space, right? Which you would have called an imbalance, but never do that. That is the exception. That is why I need to teach base now. That is why I need to introduce base to you so that you can understand. That is the exception of an imbalance. If what you have is not 3 drops, that is 3 pure drops like this, okay, is not a 3 pure drops like this, whereby between this high and this low, you now have an imbalance. If what you have is a drop, a base, and a drop, between this low and this high, there is no imbalance there because a base is usually fixed. A base is a constant. A base is not something you want to change, okay? It is where the negotiation happened before the next impulse. I hope I'm making sense. So a base is not something you want to separate. You can't separate it. It is a whole entity. You can't separate it into lows and highs. So which means that in that scenario, you consider this whole thing as a structure. This guy here as a structure. You just pick the whole base as your POI or whatever whenever we get there. Okay? So you don't see between this low and this high, you don't call that imbalance. It is very wrong. I hope that is understood. So that's what I want to clarify. So those are bases and imbalance. So let me quickly show us an example on that. And then we move to the final part of tonight, which is what? Which is time frame difference. So like I was saying before the call cut off the other time, I will send videos on each of these topics, okay? On range structure and all that, like normal videos I've taught in the past, so that you can watch it along with your own videos and you will use that to have better understanding of the whole concept. Is that understood? Like especially time frame difference, okay? So especially time frame difference could be complex to understand. And also before we go to time frame difference, please don't trouble yourself if you don't understand time frame difference yet. Don't trouble yourself at all. Don't trouble yourself. Time frame difference understanding usually comes more the deeper you go. That is, the more we go into other stages. So by the time it is first taught, you might not understand it at all. It is just normal, okay? Even though it is simple, but I don't know, most students find it complicated, which is normal though, but I think it is kind of simple. Just try to listen to every word I say when I'm teaching it. Try as much as possible to listen to every word I say when I'm teaching it. Is that understood? Okay, good. So let's now go to what is it called? So let's go to other things that we have. So for example, okay, this is more example. This is an hidden base. We call this hidden base. On lower time frame, you will see the base purely, but here it will appear as a wick. We call this hidden base. So can someone tell me what happened here? These guys are unsupported. These guys, they mitigate each other already and carry the same degree. They are unsupported. So price induce them as liquidity to now use the next, even though this is unsupported as well. That is rule of double unsupported basis. This guy is unsupported, price induces as liquidity, then use the next one for continuation of order flow. Okay, so but that is that. Don't let us waste time. So what do I want to show you guys? Okay, I want to show you guys what an imbalance is. Okay, so for example, between this high and this low exists an imbalance. So we have the first candle, which is a base in this scenario. Now you can see that this base here, look at this base here. You see that we have two bases that have mitigated each other. That is what we call supported bases. So what do you see price do? Price use the first one for continuation of order flow, isn't it? Can you see? As the PO high. So that is double basis. On lower time frame, what you will see it as is something like this. Higher high, higher low, then higher high. That is structure 1, structure 2. Okay, so you can see price using the first one because they are supported. They both mitigate each other. Is that understood? So that is an example of what we have been showing you. So this is candle 1. Candle 2 is a huge candle, and this is candle 3. This guy right here. Okay, so between this low and this high and this low do not touch each other. So there exists a huge imbalance between them. So that is what we call an imbalance. Okay, so between this low and this high, there exists what? An imbalance. Imbalance. Okay, no matter how small or how big as it can be. Let's look at some that are relatively small. Okay, so between this low and this high, the high of this candle, these are 3 candles. Candle 1, And mind you, it doesn't have to be the same candle. Very important. It doesn't have to be the same candle. So candle 1 here is a closes as a bullish candle. So we have candle 1, candle 2, candle 3. So between this low, between this high and this low, they didn't mitigate each other. So there exists and what? An imbalance. High MB. Is that understood? Even between this low and this high as well, we have an imbalance. We have an imbalance. Okay. Like that, like that. So we have between this low as well. This low, this high rather, between this high and this low, we have an imbalance. Okay, we have an imbalance. The reason why this guy is protected, you will know it later when we get to momentum shift. We have what we call momentum shift. You understand why price is not expected to go this far. You understand how you would have taken trade here without waiting for the POI above. You will understand everything. How you won't even be waiting for that above to take trade. You will understand it later in this training program. Okay. So those are imbalances. Okay. Those are imbalance. Now I want to look for a scenario whereby we have a base that looks like imbalance, but it is not imbalance, but a base. I don't know if we have that on this time frame. Let me look closely. Okay. I just need a okay. I think around there will be something like that around there. I'll go to higher time frame now. Around this area, there should be something like that around this area. Let me go to daily time frame. Objects. Okay. So this is daily time frame. Okay. I can't even recognize the area again. I just want to look at that example, not like it is important. Whereby we have okay, this is an example here. This is an example here. Now look at this guy. Even though it look as if, price, what is it called? Even though it look as if, price induced this high or something. No, that's not true. It was just a coincidence that price came to use this. So between this high and this low, there is no imbalance. This is a base. This is a drop. This is a base. And this last candle is a drop. Is that understood? So this is a drop base. So this candle as a whole is the OPOI. So it was just coincidence that price came to the extreme of it. So don't think it's because there is imbalance between them. Okay. So I would love to actually have an example of a neater one, but not to waste our time. I may proceed if I can't see it in the next 1 minute. I will just send it later as example, or even in the other videos that you guys will watch, you'll probably see something like that. Okay. I'm coming. Let me go to weekly. So an example is this. Beautiful. Beautiful. Now, this is very beautiful. This is the perfect example I'm searching for. Now, this is a drop. This first candle is a drop. This second candle here is a base. And the last candle there is a drop. Okay. So can you guys see it clearly? A drop. This doji candle a base. And this last candle a drop. Now, if you have marked this high as imbalance high, because imbalance high, we usually see it as liquidity. If you have gone to mark this high right here, as imbalance high, you would have missed this sell. This is a weekly time frame. Do you know how many pips this will be from this sell? I mean, Let me pick our rectangle. So this is that base. This is the base. Okay, as POI, the whole of the base as POI. Okay. So that was a drop. A drop. What I mark here with rectangle is the base, and then this last third candle is also a drop. This third candle here. Okay. So imbalance I, we usually see it as liquidity. We always expect price to raid it a little before price continue order flow. But in this scenario, did you see that happen? No. Price didn't raid this high because that high is not an imbalance high. Okay. So an imbalance high is more like showing that price has not mitigated an area. That is the work of an imbalance. Do you understand? So we always expect price to raid the high or low, as the case may be, for an imbalance. So this particular guy is a base. The whole of this candle is your PO high. It is not an imbalance. If it is valid as an imbalance, then we will expect price to raid that particular high. Even though this last guy is protected, this first one, we call it sell side imbalance, buy side inefficiency. The imbalance above here, this high to this low, is actually protected. It was protected for those sell. Okay, so it was protected because of this momentum shift. Okay, so it was protected. Is that understood? So we'll still come into all that. So we have a huge momentum shift. So surely it was protected. I wouldn't have been looking at that scenario. But I would have wanted to look at this guy here, this other one here. Okay, we have an imbalance here, this low to this high. But meanwhile, I would have still expected price to raid this particular high as well and use the second to the last one to the protected one as order flow area. But I wouldn't have done that only because this guy here is a base. A drop, base, and then drop. So that is the only reason that makes this high not to be what? Rated. So the whole of that base is a candle, not a what? Not an inefficiency. Okay, so not an what? Not an inefficiency. Okay, so that area is what? Is protected. That particular area is protected, and that is a base. Okay, so and that would be that for that. So for example, look at this here. This wasn't a draw based drop. Look at this. This was a three rally, a rally, and also a rally. Okay, so and what did you see price do? Price was able to there was imbalance between the two, this low and this high. So price was able to raise this high. In fact, I remember I took this sell. I explained it to the senior people that are here. There are some senior people that are here that I explained this sell to. This particular sell is a reel on my page. This sell from here for you to know that it is not a lie. If you go to under reels, if you go to feed on my IG page, you will not see it. If you go to under reels on my page and you scroll down, that particular reels that are stranger, you don't know my name as the sound, that reel on that my page, it was this cell that was used as an example there, GBP/USD. It was this particular cell. Okay, so many people were selling before this high got rated, but I knew that this high would be rated as liquidity because it is an imbalance high. Okay, so I knew that it would be rated then before high took that sell. So that this particular sell is actually on my page. Okay, so that is an imbalance. So there's an imbalance between these two, between this low and this high. So it is not a base. You guys understand that, right? So that would be that. Okay. This is what I would do. I will send video. I won't teach time frame difference. I will send video on time frame difference because everything I will say, in fact, the video I will send is more comprehensive than what I would teach. So I will just send video on it so that you guys can watch the videos. We are already late. I don't want to have another session again. It will be tiring. Learning shouldn't be too long. So I will just send video on time frame difference. Is that understood? That is the last part. So we'll be able to cover a lot. So I'll just send video on time frame difference as the last video for tonight. So you guys will watch everything. If you have questions, drop your questions. I will pin all your questions. Even if I can't answer all, I will surely answer everything on Friday where we'll have major question and answer. Okay, so how was the session, guys? How was the session? Do you guys enjoy it? How was the session? You guys enjoy it, and always remember to drop fire in the group if you really enjoy it. Always appreciate the teaching, irrespective of the money you've paid. Knowledge should as well be appreciated. Trust me. Knowledge should be appreciated. Knowledge should be appreciated. It is not easy. Trust me, to gather all this knowledge, it takes years. So, and you will only be